Be Wealthy and Smart, episode 523.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about your tax refund and 8 ways to spend your money. This comes to us from Investors Business Daily, and it was written by Paul Katzeff. And it says, tax season is underway. Are you already wondering what to do with your IRS tax refund? Here are 8 tips for how to spend that money. The average IRS tax refund last year on 2017 returns was $2,825. Odds are refunds for 2018 will be bigger, as Congress's Joint Economic Committee said that taxpayers on average will enjoy a 5.2% cut in taxes due to the Trump tax reform package. If you did not adjust your withholding, that translates into more money back. I just want to pause there and say, since we did have a tax cut, if you have looked at your tax rates and you're anticipating making what you made last year, and you can see that you're going to pay less this year, then I would adjust your rate so that you have more cash flow during the year and you're not giving a free loan to the government. The article goes on to say, financial advisors have no shortage of suggestions, which range from ways to pump up your retirement nest egg to helping your kids pay for school to treating your honey to a nice restaurant dinner. Rather than act impulsively, think about your financial goals and your options, says Rich Ramasini, Director of Strategy and Sales Performance for PNC Investments. How you allocate your refund depends on your greatest needs. Here are 8 suggestions. Tip number 1, pare down debt. High interest rate debt in particular is a big financial burden, so pare it down or get rid of it. For most people, that means paying off balances that you're carrying month after month on 1 or more credit cards. Most are horrifically expensive, said Dave Mendels, Director of Planning at Creative Financial Concepts in Manhattan. The average rate was 14.14% as of January 9th, according to WalletHub.com. Imagine how better off financially you'd be with an investment earning that much instead of an account charging you that much, Mendels said. I want to pause there and say absolutely, that would be my number 1 priority as well, would be to pay down high interest rate debt. Any credit card debt, put your extra cash toward your high interest debt. And that's another good reason to go in and change your withholding so that you have more cash flow to pay down that debt sooner. So you're not paying that 14% for the entire year, waiting to get your refund back at the end of the year, but you have the cash flow to be able to pay it down as you go. Tip number 2, build emergency savings. Create or beef up an emergency savings account. Why? 40% of Americans don't have enough savings to cover a $400 emergency expense, according to the Federal Reserve. The only question about an emergency is when will it happen to you, not if, said Trevor Shakiba, president of Shakiba Group outside Houston. Without savings, your options for coping are expensive, like using a credit card or borrowing. Aim for 3 to 6 months worth of expenses in your rainy day account, says James Nichols, who leads Voya Financial's Customer Solutions Group. I'll pause there and say, an emergency fund is important. You need to have some cash on hand in case of something happening. But by the same token, you don't want to have too much dead money just laying around. So it's a fine balance, and it's a good way to use your tax refund. Tip number 3, boost your 401k. Make sure you kick in enough to maximize your employer's matching contribution, Nichols said. That's like doubling your own contribution. It's free money. I definitely agree with that. You don't want to leave free money on the table, and you absolutely want to put in as much as you can, especially if your employer is matching it. Tip number 4, pump up your IRA contributions. Adding to your nest egg is a no-brainer, and if you qualify, consider putting your money into a Roth IRA instead of a traditional one, Shakiba said. Among the advantages, especially for younger taxpayers, by the time you retire, all withdrawals will likely be tax-free. Yes, that's true, but if you make too much money, you're not able to contribute to a Roth IRA. So just be aware of that. There are limitations, and if you make too much money, you can't use a Roth, you have to use a traditional. Number 5, kick into a health savings account. Running out of money in old age for medical expenses is one of Americans' biggest fears. Contributing to a health savings account will help you prevent that. Better even than an IRA, an HSA has a triple tax benefit. You get a deduction for contributions going in, money grows tax-free inside the account, and withdrawals for medical bills are tax-free. But remember, you must have a high deductible health insurance plan or an HD/HP to use an HSA. Number 6, save in a 529 account. Save for your kids' education in a 529 plan. With new tax rules, you can save for secondary education now, not just college. You do not get a deduction for contributions, but savings grow tax-free and qualified withdrawals are tax-free. Tip 7, pay down student loans. Student loans can be expensive, especially if they are not government loans, Mendel says. That type of debt prevents workers from saving for other very important goals, such as retirement, so it's worthwhile to whittle down that debt or eliminate it, Mendels said. And tip number 8, reward yourself. Use some of your refund to give yourself a treat, like taking the family out to dinner or buying a new TV. Up to 3% to 5% of your IRS tax refund is okay, Mendel says. Feel free to splurge up to 10% of your tax refund, Ramasini says. End of article. Well, I'm going to differ with tip number 8 a little bit on the reward yourself. Rather than have it be on a TV or on a dinner out, I'd say put it toward a vacation that you have planned for your family, because it's nice to get away, have a little trip, maybe go on a cruise or something like that. And getting a new TV is just another depreciating asset. You don't typically need a new TV, and a TV is just going to encourage you to sit around, put on weight, and do a lot of things that you're probably not going to be happy about. It's taking time away from you working on your side hustle. It's taking away time that you could be exercising or burning some calories. And instead, being a couch potato is not a great thing. I don't think that's a great way to invest in yourself. So I'm going to say forget the TV and save for a vacation. But those were 8 great ideas on what to do with your tax refund. Just to recap, tip number 1 was to pare down high interest rate debt, specifically credit card debt. Tip number 2 was build an emergency savings account. Tip number 3 was boost your 401k contribution. Tip number 4 was pump up your IRA contributions, a Roth, or if you make too much money, then a traditional IRA. Tip number 5 was contribute to a health savings account if you have a high deductible health insurance plan and qualify. Tip number 6 was save in a 529 account if you have kids and you're saving for their education. Tip number 7, pay down your student loans. And tip number 8, reward yourself with a vacation. If we haven't yet connected on Instagram, go on over and get my daily wealth tips at instagram.com/Linda P. Jones. And if you haven't checked out the Wealth Heiress book, it's back in stock. You're already a wealth heiress, now think and act like one. 6 practical steps to make it a reality now. Give you a millionaire action plan, a wealth heiress checklist. You'll be well set for your personal finances when you read my book. You can get it on Amazon.com, or if you are out of the country, Amazon.uk. And I'm still looking for you to complete the survey if you haven't yet. Let me know a little bit about yourself and what you're struggling with so I can tailor make the podcast just for you. And don't forget, we still have our Sizzle Review contest going through the end of March. You have 25 prizes possible to win. 11 of my Wealthy Mindset Blueprint audios valued at $197. 11 of my Wealth Heiress books, personalized just for you. And 3 people will win a wealth mentoring session with me for 30 minutes valued at $500. All you have to do is leave a podcast review and you'll be entered into the drawing 5 times. Leave a book review and you'll be entered into the drawing 7 times. And do both and you'll be entered into the drawing 10 times. If you've already left a podcast or a book review, thank you so much. And you're also still eligible to win. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.